What is the relationship between the Fed funds rate and mortgage rates? Before we get into today's topic, consider subscribing if you haven't done so already. And if you have subscribed, don't forget to share this video so others can stay updated with relevant mortgage information and timely mortgage advice. There's a belief out there that mortgage rates move in accordance with the Fed Reserve's rate hikes or cuts, and rates go up and go down following that. But that's a common misconception. The reality is that mortgage rates are determined by the market's demand for mortgage-backed securities, which are bonds that are backed by pools of mortgage loans on Wall Street. The Fed funds rate, which is the target range for short-term lending, is the loans that they lend amongst the large financial institutions. And the Federal Reserve only has 8 scheduled meetings a year to decide if they're going to change the rate. Whereas mortgage-backed securities, their value can change every day, like the stock market. Although the Fed funds rate and mortgage rates may have a correlation over a long period of time, they can sometimes move in opposite directions for weeks or for months, because the mortgage rates are based on the longer-term loans, while the Fed funds rate deals with short-term lending, like credit cards, car loans, things like that. So the latest 0.25% increase in the Fed funds rate was expected, and that was already incorporated into the mortgage-backed security prices. So despite the rate hike, the longer-term bonds, i.e. interest rates, had a good day. And that was because of the Fed Chair Powell's his open-minded stance at the press conference, where he indicated that high rates are only necessary based on economic data, and that the Fed could start cutting rates if necessary. So as bonds improve, the bond pricing, mortgage lenders have the option to lower their interest rates. However, there can be differences amongst banks and lenders in the rate that they offer due to factors such as their upfront costs, mortgage insurance, different loan type discrepancies. With all that said, the average lender is now in line with the lowest levels for interest rates that we've seen in about 5 months. Thanks for watching, and drop your comments or questions down below. Be sure to subscribe for more educational videos, and we'll see you next time.